Ladies and gentlemen, good day and welcome to the Harsha Engineers International Limited Q2 FY23 Analyst and Investors Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Kale from Axis Capital. Thank you, and over to you, sir.
Thank you, Fazan. Good evening, everyone. Welcome to the Q2 FY23 results conference call of Harsha Engineers International Limited. From the management team today, we have with us Mr. Vishal Rangwala, CEO and whole-time director, Mr. Sanjay Majumdar, consultant, and Mr. Maulik Jasani, VP Finance and Group CFO. I will now hand over the call to management for their opening remarks, post which we can move to the Q&A. Over to you, gentlemen.
Thank you, Nikhil. Hi, this is Vishal Rangwala, and good evening to everyone. Thank you for joining this Harsha Engineers International's first investor call. Considering this is the first call, I would like to talk a bit about Harsha Engineers to begin with. So Harsha Engineers is the largest manufacturer of precision bearing cages in India, and we supply three major material of cages, namely steel cages, brass cages, and polymer cages in the size ranges of 20 millimeter to 2000 millimeter diameter. We serve the global market through four of our facilities, two located in India, one in China, and one in Romania, all low-cost manufacturing locations. We have a very strong global customer base, names like Schaeffler, Timken, SKF, ZF, Flender, JTEC, and SK. And we supply bearing cages, precision stamping components across variety of industry and automotive application. So very vast range of end user application we are covering through our product portfolio. We have a very strong tooling design and process design capability through which we become a partner to our customer in their precision product needs. So this is a little bit of background about Harsha Engineers. Let me start talking about first half of FY23 results. We continue to see a strong result for first half in FY23. We are on track on our expectation of a top line growth as well as a strong bottom line growth. We are seeing actually sequentially, we don't look at sequentially, but we look at year over year, considering there are a lot of seasonalities also involved in the 4 quarters. And our actual focus is, annual basis. Specifically on the second quarter side, we saw material prices significantly reduced towards the end of first quarter. And that had an impact on the second quarter. Specifically, we had a significant price pass-through mechanism customers, so those came into picture. Ultimately, however, we saw the EBITDA margin maintain, and as a percentage, they actually improved. And that shows the strength of our customer relationship and pass-through mechanism. Also, from our original projection, considering material situation, we are still considering about 10 to 15% annual growth this year. However, considering material pass-through, we are expecting to grow our EBITDA as a value in the second half, and as a percentage, it will remain strong. Typically in quarter 2, we saw some impact of energy crisis and war situation in Europe, demand as well as our demand in Romania facility, and some impact related to ongoing lockdowns related to COVID in China. We are closely monitoring those situations and very hope turnarounds. While India remains a very strong position for us. Talking about some of the long-term growth drivers for us, we are continuing to grow outsourcing projects, getting more outsourcing projects from our customer. Another growth driver, bronze bushings, they are continuing to grow for us. We faced some execution challenges in first half, and we have overcome those, and expecting that will add a significant growth in second half. And as well as continuing to grow our wallet share with Japan-based customers. And we are very cautiously optimistic about our continued future in the second half of this year. With that, to explain more data in detail, I'll Maulik.
Yeah, thanks, Vishal. Good evening, everyone. We have already uploaded our financial result as well as the earning presentation on the exchanges and our websites. We believe that you have gone through the same and you have received enough information on our quarterly performance. Let me walk through the key numbers of our quarterly and half-yearly performance. In the Q2 September 22, our consolidated revenue is around 322 crore with an EBITDA of 52 crore, while our profit after tax at consolidated level stands at 28 crore for the quarter 2. Our half-yearly performance at consolidated level is with a revenue from operation at 720 crore with 14% growth over last half, and with a EBITDA of 108 crore with a 22% growth over last year first half. Our PAT at consolidated level for the first half, 6 months is half year and 6 months is 59 crore, and with a growth of 34% over the H1 of the previous year. At a engineering level, at a consolidated level, our engineering business has performed for the half yearly at 677 crore with a 14 top line growth over last year first half, and with an EBITDA margin of 15.8% resulted into 107 crore EBITDA. While our Harsha India engineering business has a top line of 507 crore for the first half of FY23 with a 23% growth over H1 of the FY22, and we have achieved a EBITDA margin of 19.7% at Harsha India business with a EBITDA of 100 crore. We have received and we are thankful to all the participants on our IPO, and with the IPO listings on 26 September. We have utilized the IPO proceeds primarily for the repayment of the debt amounting to 236 crore approximately, and balance utilization is as per the prospectus provided, and we are utilizing in the quarter. So at the end of the quarter 2, our utilization has been mainly used for the repayment of debt only. With this, we open the forum for Q&A. Over to the operator.
Moderator, can we open the house for Q&A, please?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. Sir, we have heard from many industry participants that the wind exports from India, they are slowing down. So the gearbox exports as well as the turbine exports. So do you think that can this affect in any way our ramp up of the bronze bushing facility?
No, currently, no, we are actually behind schedule on that ramp up. And that's related to internal execution. And in terms of demand, we don't see any challenges there. So for us, we don't see that as a impact factor for us.
So Harshit, just to add, there's enough headroom available so that the saturated level. So if there is technically some slowdown, doesn't impact us right now.
Sure. Understood, sir. Understood. Thank you very much for the response. Sir, my second question is, could you update us on the CapEx plan as to what kind of CapEx we are planning to incur in the second half of FY23 and what would be our full year FY24 CapEx? And this CapEx would be towards which production lines? I believe you were planning to acquire a proper new greenfield capacity. So where are we in that stage?
That third facility land acquisition is in process. It's not yet completed, but it is in process and we will soon finish that. In terms of capex, we are going to invest about 44 crore in various capacity and some infrastructure this year, and we are also investing about 28 crore in actually wind and solar power generation project, basically to address long-term sustainability as well as reducing or addressing the power-related cost. So that's what for this year the three major heads in capex are. For next FY24, we are approximately projecting that we will do about 100 crore of capex, but we will have a little bit more specific number as we come near to
Understood, sir.
So around 40 in second half and about 100 next year. That's the current plan.
Capacity.
Understood, sir. Understood. So just one last question from my side. So, do you see that any kind of bearing manufacturing relocation which is happening from Europe to India, given that Europe could become uncompetitive in producing many kind of industrial equipment? Do you think that bearing could be one of those equipment and more amount of bearing manufacturing itself might shift to India from the European location? Do you see that happening?
Yeah, we see that as a strong ongoing trend where a lot of our customers have indicated that to be the case. I'm not at liberty to kind of share those specific details, but as a trend, I confirm that is a significant ongoing activity by our customer. And this is happening across the board. That India is becoming a preferred location for manufacturing bearing, and we will definitely indirectly benefit from that.
Understood, sir. Thank you very much for answering my question.
Thanks, Harshit.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, very good evening, everyone.
Good evening,
Sandeep. Yes, the first question is pertaining to the engineering business growth. I think consolidated growth is 5% and the India growth is about 12%. You did mention there's a pricing correction. So if you could share the breakup between volumes and value, how the volume growth at least has been, because of course to the balance expect the pricing would have come down.
Yeah. So Sandeep, as we mentioned in the initial speech, the quarter two has been impacted because of the metal price reductions, and that has impacted on the growth of quarter two. If we see the H1 over H1, the growth for India engineering is 23%, and that consolidated engineering is 14%. The quarter two impacted number is mainly on account of the price reduction, partially on account of low volume demand in the Europe. Effectively, if we see the growth over the volume, the overall growth of H1 over H1 broadly represents the volume growth percentage also.
I see.
Which
so
is
this
23% at India and 14% at Concall.
Okay, I got it. All right. And second question is pertaining to these new products, bushings and castings. You did mention there were some technical challenges internally because of which you couldn't ramp up as the expected pace in first half. So do we still expect these to double from FY23 base to FY24 and meet that 100 crore kind of a run rate by next year, or would that get pushed because of this delay?
No, I think we continue to have those expectations. You mentioned delay. That's more of a 1 month or about a month and a half of delay, and that much impact we may have this year. But right now we are back on track on that ramp up. So very hopeful of achieving those numbers, maybe with minor correction.
Got it. And third part is on the Japanese OEM conversion. You did mention that the talks are still ongoing in place. Can we expect some revenue booking from fourth quarter from these customers? If you can give some sense, what can be the quantum and what can be the size that you can achieve in FY24 from the newer customers in Japan?
So, just coming back to that first half, we have grown significantly even in first half to the tune of, about 40-50%. So just compared to the previous year first half. So basically, what we have talked about, I think that is continuing trend, and that growth is happening. Yes, there are a lot of further discussion happening. So we expect that fourth quarter will see further supporting jump in that area.
Okay. So 40 to 50% growth from Japanese customer in the first half, right?
Yes,
Correct.
Okay.
as compared to the previous comparative first half.
First half. Understood. Of course. And last question is, I agreed, the domestic growth is 12%, international growth is 5%. If you could share separately the growth numbers for China and Romania entity, that would help.
So the major challenge has been in the Romania because there is a volume softening challenge in Romania. China is still on growing basis, but China also have a trading portion. So with that trading portion, the China growth is around 22%, which gets eliminated at Concall, Sandeep. While Romania has been degrowth around quarter over quarter is around 20%.
20% year on year.
H1 over H1 is 6%.
Sorry, 20% year on year decline in 2Q and 6% decline in 1H. Did I hear that correctly?
Is 6% decline, and quarter two over quarter one is 20%.
Okay, got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ajox from Unifi Capital. Please go ahead.
Hello, am I audible? Hi.
Yeah.
Yeah. Thank you for the opportunity, sir. Sir, my question again is on your broad levers, the large bearings and bronze bushings, outsourcing from customers. So can you please help us with the quantification of these? How do I gauge if outsourcing is working or if bronze bushings are actually doing very well? What numbers can I use to quantify the same?
So I think there are two parameters that we want to talk.
Okay.
One is if you compare what I did in bronze bushings in first half vis-a-vis what I did last year, we have done a higher sales in first half as compared to entire previous year, if that's a yardstick.
Okay, perfect.
Second, second, as Vishal indicated, there were some bottleneck issues in terms of execution because capacity creation was not happening the way we wanted. So for a delay of about 1.5 to 2 months, we believe that second half should start catching up. And, very, very broadly, we should see at least a 200-300% growth in bronze bushing business this year as compared to previous year. Now, if that yardstick makes you happy, then that probably answers your question.
Yeah, that's really helpful. So that's wonderful. And on the outsourcing,
on the large size bearings, there is a lot of traction. The problem is, you can't have these things to happen. You are dealing with large companies. They take their own sweet time. But we are internally very bullish about large size bearing cages. That is also showing a very positive growth trend. I don't have the exact quantification number available.
Okay. And sir, on the outsourcing from customers, the share of business, any number from there? Probably the pie growing up.
No, so specifically difficult to answer a number on that.
Okay.
But we are continuing to win more and more business when it comes to outsourcing from our customers. And our customers are still continuing to look for outsourcing, and there are multiple projects of outsourcing under discussion with our customer, and some are under execution or like product development and then execution. So various stages are there to actually realize it, and we are actually seeing an acceleration of that trend specifically due to China Plus One, as well as challenges in Europe. So we are actually seeing positive acceleration there.
For India.
Okay. Yeah. Sure, sir. So, and the other question I had was on the margins. I'm assuming the new businesses and even the bronze bushes, large bearings will be at a very strong margin versus what the company is reporting, right?
No, so if you talk of margins, I think Maulik will explain first India and then how it is a function of a consolidation.
So just on your specific questions on the new product line of bronze and bushings, our margin is at par or slightly better than the India engineering margins, which we historically have.
It is around 20%.
Which will be 20 on plus in case of bronze bushing.
Okay. Understood. Oh, that's very helpful, sir. Just a final question on the pricing. So I'm assuming that if there is a metal price reduction, you have to pass it to the customer, and therefore the top line will look muted. However, you will be holding the margins. Is that right? That's the understanding.
Actually reporting a better margin in percentage terms.
Oh, okay. Oh, got it.
Percentage will be better, and you rightly absolute will remain intact and better rather.
Okay, that's very helpful, sir, and all the best for your future. Thank you for that.
Thank you.
Thank you, Ajay.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Hi, good evening, and thanks for taking my question. Sir, could you sort of tell us about the what percentage of India business is exports in this quarter?
Sure. So in India business, give me a moment.
India engineering, I mean.
Yeah.
Out of India engineering, our export is around 50% for Q2, and in Q1 it was around 52%.
And okay, and how much? And just to understand, how much is dollar denominated and how much would be euro denominated, or just if you could give some broad sense there.
So on an average, it remains 50-50, Sonal. Sometimes it goes on either of side, but on an average, it remains 50-50.
And so in that sense, and do we hedge these impacts? Just trying to understand.
So as our policies, we attempt to hedge around 50 to 60% of our open exposures for the receivable in a plain forward terms for next 12 months. Balance we keep open.
Sorry, hedge 50% of the receivables.
50 to 60%
on a rolling basis.
On a rolling basis for 12 months, we hedge it in terms of forward contracts.
Got it. Got it. And so as of now, we would not have been impacted by the rupee depreciation, or we have seen some positive or negative impact as a result of that?
Yeah. So again, it depends on the exposures we have, but on an average, due to 50-60% exposures has already been taken care of in terms of forward. In case of rupee appreciations, so on an average we remains neutral or positive in the long run, because in structurally it remains positive. And on that we also have a small amount of options which we take for a longer period, year 2 to year 6 as a strategy. That option is premium paid option only.
Got it. No, so I'm just trying to understand, like on euro hedges you would be gaining, on USD hedges you would.
Yes. As of now, on the hedge side, on the euro we are gaining, and in USD we are getting a lower realization. But for the open exposures, it is reverse. The USD is giving us a better realization, and on euro we are getting a lower realization on the open exposures. And that's how this strategy of 50 to 60% hedging works in positive way.
Got it. So, so overall for the quarter, would we have a sort of I mean, that would be included in other operating income or in other income?
So, it is part of other operating income, and for the last quarter, September 22, the impact is around 3 crore positive. Both put together, both the impact of concluding forwards as well as the open exposure realization and M2 of the.
Got it. And just lastly on the export side, I mean, out of this, like you indicated, roughly 50% is exports. How much of this export is really to China and Romania? I mean, like to your subsidiaries?
So India to China exposure as of now is around 12 to subsidiary. Yeah, India to China subsidiary. So now I will come back to you with these numbers. I don't have it handy as of now.
Got it. Just last question from my side. I mean, like
exports are on direct basis, Sonal?
Yeah, so this is very small amount.
China would not be more than 20 odd crores. That's my assumption, but we'll work it out. Yeah, it should be lesser.
Got it, sir. And just last question in terms of the, I mean, like clearly, like you mentioned, you're seeing lower volume demand in Europe, and I mean, clearly, I mean, the geopolitical as well as the economic scenario seems to be worsening on the developed world side. So, I mean, what sort of visibility do you have? Like, what is the lead that you have in terms of orders? I mean, like lead time for orders?
So basically, we are seeing overall slight softening, as I mentioned, in Europe. But overall India remains strong. US and rest of Asia, including China, has remained strong for us. So in terms of visibility right now, that's what we see. This is future is a little bit of developing, so difficult to exactly say how it is flowing.
Right. No, what I was trying to understand is like given the transition, I mean the shipping time, etc. I mean like the customer is ordering from you for the next quarter currently, or for, I mean like how much in advance would they order from you, right?
Yeah. So now the shipping times have started to normalize, at least going forward. And customer, part of this, demand reduction or whatever softening, what we call, it could be because of that as well, because, they are also seeing that supply chain stabilizing, and now they are also keeping a lot less buffers in place. So, in general, we are seeing them ordering about month and a half to 2 months ahead in general. So a little bit less than a quarter.
Okay, great. Thank you so much.
And you see, we have long-term contracts, but the orders, they keep on coming. So if you look at the actual order book vis-a-vis the visibility, we have a very decent visibility at India level.
Got it. Yes, sir. No, I understand that. I mean, the thing is that the volumes will fluctuate based on the near-term orders that the customer places. I know you have longer-term contracts, but the volume and your revenues will fluctuate as per the short-term orders that they're giving you, right?
Right.
Sonal, just to respond to your last point of sales done from India to Harsha China intercompany, for the first half, it was around 15 crore.
Exactly. That's what I told. Less than.
Yeah.
Oh, okay. And is there any export to Romania?
No.
No.
Got it. Great, sir. Thank you so much.
Thanks.
Except some tools. Yeah.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Prolin Nandu from Goldfish Capital. Please go ahead.
Yeah, hi team. Congratulations on a successful IPO. A couple of questions from my side. One is that if you look at the growth drivers in your India business, right? I mean, and if you look at the natural growth that the bearing industry will probably grow at, and then there are 3 drivers which I can probably list down. One is more outsourcing from the existing customers. The second is the larger bearing, and third is some of the Japanese customers which we have been able to, probably get into, and that will grow. So in terms of size of the opportunity that we have, which one of these? I mean, how would you categorize in terms of the size of opportunity in terms of number 1, number 2, and number 3 amongst these 3?
So to begin with, another fourth one I would add to this is, bushing, bronze bushing as a product line is a significant growth opportunity for us. Now, I think it's slightly difficult to properly quantify the opportunity. But from a size of the opportunity, I would rate that the bronze bushing, if the whole the market trend as we understand happens, is a very large opportunity globally, and we are being early entrant to this. Feeling very confident of getting a big chunk of that. The second one I would rate is kind of parallel is outsource opportunity with Japan-based customers, where our share is very small, and taking that to even a respectable percentage is a great opportunity for us. And similar to that is still a pending outsourcing from our customers, where we were projecting about last year that still about 40% of their cage needs they are insourcing. So I think our top 3 would be this. Now with the large size, there is a overlap with outsourcing and a large size, because big chunk of opportunity is also the large size cages. So large size is also a significantly large opportunity which has some overlap with the outsourcing.
So just to sum up, if we talk of cages, if the bearing industry is growing at say 7-8%, we believe that our cage business has enough depth to grow at least anywhere in the decent range of about 15%. And that's where our village is. And then of course the bronze bushings, etc. You get my point?
Yeah, I get your point. Just to follow on some of the points that you have raised, on this bronze bushing side, while you mentioned that there have been delays, just want to understand, has these delays been from a customer end or from our end? And in terms of this whole, I mean, what I understand from bronze bushing is this is the story of penetration, right? I mean, there is an existing product which we are providing something which has better efficiency or better yield, right? For example, or lower power consumption. So that trend, is still strong, right? Or has it further strengthened? Have you got more confidence on that trend, from your customers?
Yeah. So so first addressing the execution part. So it is a challenge when what I mentioned was about execution. Our customers are pushing us very hard on supplies of this. Part of this they are importing, and they've selected us as a partner in India for this. So this is a quite complicated product requiring a lot of engineering, lot of new capacity we have added and ramping that up. So there was a delay on that front. That's what I meant, not related to the order or demand situation. And the bronze bushings, we are actually, this is a drive by wind as an end application by windmill companies as well as the gearbox companies. And they are redesigning their windmills and gearboxes to change the design such that instead of a bearing, a bushing can go in, which has its own weight, size, and other advantages. So we are still continuing to see that as a strong trend, and we are working on next generation of bushings also closely with our customers. So that's an ongoing situation.
Sure. And a second follow on the Japanese customers. Is it fair to say that typically Japanese will start slow, and once they ramp up, the ramp up can be very fast and the scale can be quite large? Is that a fair way to look at this opportunity with the Japanese customers?
Correct. We also think that, and actually if you look at our last 2 years growth with them, we are seeing a very strong number of growth. They tested us for a while initially, so we have grown slowly with them, and then now we are growing significantly with them, and further we are expecting acceleration to happen. Also, part of this is that we have to develop each product. It is not just one product and they switch on once they agree, they switch it on. So there is a whole time frame needed to do the product development for that bearing. So there are a lot of custom products ultimately going into it. So there is that whole time lag which takes place, which goes through approval process and all that. So that's what is a constraint of moving from 100 to 1,000 in a single day. I think that would come in, but we see a very strong growth, as I mentioned, about 30-40% growth year over year we are seeing and continuing to see on that segment in last 2-3 years.
Sure. One more question, last one from my side would be, for the previous participant asked question, what sort of a opportunity do we see when some of these production bays of these bearing companies move from the rest of the world to India? Now you are, I believe that you are not at the preview of sharing some of these developments which are happening, but just to understand from our end, again, the size of this opportunity will require us to put additional capex, and that would be the scale of this, or will we be able to cater to such kind of an opportunity from our existing facilities?
In some cases, we will have to add additional capacity. In some pockets, we have capacity already in place. Some cases, we will have to add those capabilities specifically if I talk about very large size bearings. Those right now on the brass cage, we can deliver 2 meter diameter cages out of Romania. Now those kind of products are needed in India, then obviously we will have to add capacity here. And on the steel front, we are doing about 1.2, 1.1 meter diameter cages. And again, we are working on a project with customer where their need of 1.4, 1.5. So there we'll have to add capacity for.
Great. Very clear. Thanks a lot for answering the question.
Thank you.
Thanks.
Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yes, Dhiral.
Dhiral, your line is in talk mode. Please go ahead with your question.
Yeah, good evening, sir. Thanks for the opportunity. Sir, as you said that outsourcing opportunity, for low cost India manufacturing is increasing day by day. So just wanted to know, sir, how big is the European market in terms of bearing production?
Europe for bearings globally?
Yes. Yes.
I think if I remember correctly from the report, basically Europe is about 30% or so of global market when it comes to bearings. It's very large vis-a-vis when you look at India. I think it's hardly 7-8% of global market. Again, these numbers I'm just trying to remember from memory. I'm not 100% sure about these numbers. But I would say fairly large market.
Yeah, at least 20-25%. Yes.
Okay, got your point. And sir, lastly, when you say that we are targeting almost 15% kind of a growth, so are you looking at across the sector or any particular sector which is giving you that confidence?
Overall, across the sector, which would include automotive, industrial application, rail, windmill, multiple segments we supply into. And considering our product portfolio in terms of size range as well as, material capability, we address almost everything our bearing customers are looking for when it comes to cages.
Okay. And sir, just last one thing, sir, with this debt reduction, how much overall finance cost will get reduced?
So for India side, we will be net debt free, and we will continue to have some debt in our foreign subsidiaries. Annually, we foresee reductions of around 15 to 16 crores.
Okay. Thank you so much, sir.
Thank you, Dhiral.
Thank you. The next question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, good evening. I had a follow-up question. So these new conversions which are under discussions, is it possible to quantify some value that we have converted in first half, which is entirely new business that we'll do in FY23, which was not there in FY22, and the potential pipeline which is still there, out of which some X percentage conversions can happen in next year as well?
Sandeep, very honestly, there is some data we generally internally we want to keep it with ourselves. But let me try to take this a little offline.
Okay, sure. No worries. So just wanted some color because some of the other bearing component suppliers, they do share that this particular product line is under discussion without, of course, specifying the name and what can be the peak potential. Can it be 100 crores in peak potential for that product line?
So generally, as you know, about 300 to 400 products are generally under development. Now there are many customers who do not want us to share this data because it is all internally competitive with other customers. Correct?
Mm-hmm.
So I think it's better we keep it at a macro level, but we will see.
Got it. No, fair enough. And secondly, for these brass cages, where you mentioned, of course, a bulk of the manufacturing capacity lies in Romania. And of course, incrementally, this is the part that was getting done in-house and will be outsourced if we go down, say 2 or 3 years down the line. So what kind of capex building would happen over here in India, or whatever outsourcing will happen, will continue to do it from the Romania facility? What's the thought process over there?
Yeah, so actually we have a very good capacity in India. And actually Romania, what actually maybe you might be thinking about is there is a very large casting capacity, because Romania facility has two product lines. One is semi-finish, basically supplying casting, and the other is cage. And the Romania facility's focus being larger size cage. That is continuing to grow in Romania. Casting or the semi-finish is something which will remain stable or may reduce depending on the situation. So in India, we are continuing to invest in brass cage capacity. Depending on how our customers are looking at what product to manufacture in India, we may support that by adding capacity in India, even on the larger size, which are ultra large size rather, which are currently supplied out of Romania to mainly our customer base in Europe. However, we see that there is a certain portfolio of product which is extremely competitive out of India, and so most of the investment for the growth will happen in India primarily.
So answering your question, I think next year about 30 odd crore capex is lined up.
Right.
In India. Sorry,
mainly
in
towards
H2.
brass.
Sorry.
Okay, no, sorry, I had the numbers. 40 crores was H2, and balance was.
We already discussed that piece in the previous questions. So, as Vishal said, around 40 crore is planned for this year. So of that, maximum is on the brass expansion, brass and bronze expansion.
30 odd, yeah.
Okay, understood. Of that 30 is brass. Got it. Okay, thank you.
Thank you. The next question is from the line of Amit Anwani from Prabhudas Lilladher. Please go ahead.
Hi, sir. Thanks for taking my question. My question is with respect to the guidance which we have given about 15% revenue growth FY23 and 24. So any expectations on how the Romania will contribute with respect to revenue profitability, and on the bushes also, what contribution we are expecting from bushes?
So, Amit, on the Romania side, we are practically assuming that Romania would, in absolute terms, be either equal to or maybe a little degrowth as compared to last year, because Romania, actually, internal target is a little higher, but on a conservative side. So when we are talking of, as Vishal said, top line growth of anywhere between 10 to 15%, that is assuming that Romania's contribution is practically nil or insignificant because of casting. Second, in terms of margin, we explained that actually margin growth would be in percentage terms higher than last year, but as you'll appreciate, given the significant volatility and overall uncertainties, it's a bit difficult to quantify, but definitely the bottom line growth will be better than top line. That's for sure. Then that's in the H1 also.
Okay. And sir, about bushes, what contribution we are expecting?
Bronze bushing, as I explained in one of the previous questions, it's already H1 is higher than the entire last year. We believe that bronze would be a significant contribution, quantification anywhere between 40 to maybe 50 crores.
In FY24 or 23?
In Bangladesh, correct.
Okay, sir. And so my question about the margin, what kind of margin expansion we are looking for?
I cannot, it's not possible to quantify. No. We are working at it, but definitely we will try to, come a little closer maybe in Q3. But as of now, I think we will happily say that we are on track for a significant margin expansion.
Okay, sir. Thank you very much.
Thanks.
Thank you. The next question is from the line of Prolin Nandu from Goldfish Capital. Please go ahead.
Just a follow on, sir. With the gross block that we will have at the end of this year, assuming 30 crores of capex that you mentioned will be spent in H2, what's the kind of optimal top line that we can report or that we can do based on the current commodity prices?
So on an average, our gross block fixed asset turnover remains around 2 to 2.1.
Okay. Okay. So we had 800 crores of gross block in FY22 at the end of, in March 22. Is that number correct? And what could be this number? I don't have the September number right in front of me. Would it be close to 860 crores, and then on that 2 times would be close to 1,700 crores of top line? Is that a fair kind of number broadly?
Yes, at optimum level, yes.
At optimum,
Great. Thank you. Thanks a lot. Thank you, sir.
Thank you. The next question is from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Hi. Thanks for taking my question again. Just on the solar business, could you guide us as to what sort of revenue run rate will this business have? And I can see this year we are sort of not at least EBITDA positive. So could you, because this is a more project-driven business, any lumpiness that you see and any risk of because of cost escalation, etc.
Sonal, you are talking. Sorry, we missed you. About which business you are specifically referring to?
I'm talking about the solar EPC business and the way.
Solar. Oh, okay.
Right. So yeah, can you continue?
Yeah. So I was just asking for the outlook there. What sort of revenue run rate and margin trend do you see for that business?
Yeah. So see, for this business, there's one specific thing happened that there is a duty on the panel, which has created a lot of challenge for us. First quarter was very positive, but the second quarter, in terms of revenue, is still positive. So no, but in terms of revenue, it dropped. The second quarter is still positive in terms of bottom line. And ultimately, we expect that it will be doing break even or better. We are right now reporting a very positive number for first half and hoping to continue that trend. However, there is a lumpiness, as you rightly mentioned, that the second quarter revenue has dried up because of all this import duty, and this will again pick up in quarter 3. And hopefully quarter 4 is usually high because of the capex driven projects in this. So some lumpiness for sure, but bottom line point of view, we are expecting to break even or do much better.
So overall around 80 to 90 crores as we had earlier anticipated, more or less in that line, and marginally positive on the bottom line. That's it. No major capital allocation at all.
So you still expect a significant revenue in the second half as well?
No, we did about 40 crores in roughly about the same in second half, more or less. A little lumpiness, maybe 10 crores here and there. That's all. But it's materially very small compared to the bigger scheme of things, so it's not going to impact.
Got it. And the other thing I just want to understand, so most of the cost related to this business will show up in the raw material cost, because I think the number of people employed, etc., is pretty low, right? So
yeah, it's a main in case of solar, it is mainly panel cost. Yeah.
So that will come under RM, right? So if I want to adjust for this business, then I should deduct that from the RM cost, right?
Yes. At least 80%.
Yeah, you can consider 80% of the cost.
Okay, got it, sir. Great. Thank you so much.
Okay.
Thank you. The next question is from the line of Shriram Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thanks for the opportunity. I just wanted to clarify the number you had mentioned on the absolute value of your bushes sales. You said something around 40 to 50 crores. Would that be?
This year, the question was about what do I expect this year as a sales out of bronze bushings, and that was the number.
So 40, 50 crores.
FY23.
Yeah. Okay. And okay, got it. And my next question is regarding, your wind and solar power generation project. How much of cost savings are you anticipating from this in the next 1 or 2 years?
So we are expecting to generate about
90 lakhs kW.
So about 2 to 3 annual savings by swapping the power generation.
Effective and based on the current market rate.
Correct, yeah.
This roughly takes care of 30-40% of my requirement. 45%, yeah.
Okay, so what was the number you mentioned? Sorry, your voice broke in the middle. What was the number?
Around 3 crores cost savings annually.
Okay, got it. And my last question is regarding your Japanese customer where you're trying to increase your wallet share gain. So what exactly is the process to increase it? Are you going to be supplying them also with the larger bearing cages? How exactly do you plan on increasing the wallet share, and why exactly is Japan such a big focus? Are the margins better there? Is the market bigger there? What is the rationale behind it?
Yeah. So let's talk about, if you look at global bearing market, and if you look at top 6 bearing players, the Schaeffler, Timken, SKF are already our very large customer. Our estimate is that our business share globally would be in a range of, anywhere between 10 to 25, maybe 30 in some extreme cases, but roughly in that range. Now, vis-a-vis, there are 3 big Japanese players in this top 6, NTN, JTEC, and NSK. With these set of customers, our business share or wallet share is roughly, our estimate, about 2%. So the reason we are focusing there is obviously to diversify our customer portfolio, but the fact that we see that there is a large opportunity, just like these 3 we have significantly captured wallet share. There is an opportunity to capture wallet share with Japan-based customer. So that's the reason of focusing there. Second, why we think this is going to happen is because, we have been working with them last 10 to 15 years. And they have now accepted us as a supplier within this specifically precision engineering commodity. And they have said actually taking supplies from us for their Japan-based facility. And this Japan as a market is also very big. Japan-based customer brings us a lot of opportunity to further grow. So all those are the reasons why we focus and track on that, and becomes a great growth opportunity.
And just to add quickly, number 1 competitor for us, NKC, is a Japanese player. And if I am able to supply in Japan from India, it's a credit. That shows that we have a tremendous cost competitiveness and acceptability even from Japanese customers for supplies in Japan. That's very important.
Understood. Thanks a lot. And just last question is, will you be competing with any of your customers when you are supplying bronze bushings, because since they are replacement of bearings?
See, historically our customers have not gone into bushing as a product. If they decide to go, then there could be some competition. One of our customer has bought a company recently which has one of the small product portfolio is bushing in there. So again, a very difficult question for us to answer. Having said that, we feel quite confident about our bushing strategy we bring to table competencies which are not available with our customer. Our customers, strengths are bearing design, bearing grinding, and those kind of heat treatment, those kind of competencies. And the bushing requires a precision machining and a casting of a non-ferrous material. So these are very different competencies. So thereby we think that we will not be for most part competing with our customers.
Okay, understood. Okay.
So moderator, if there are no more questions, let's close the call.
Thanks so much.
Yeah, thank you.
Thank you. So should we close the call?
Yeah, please go ahead.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
So thank you very much. Thanks for patiently hearing us even so much later in the day. And we'll make sure that for the next quarter onwards, we'll try to become a little more accommodative in terms of timing. And have a great evening. And thank you very much. As usual, we remain available to answer any other questions. And we are quite very, very confident about the medium to long-term prospects, and we remain committed to what we have said. Thank you and have a good evening.
Thank you. Ladies and gentlemen, on behalf of Harsha Engineers International Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.